This is the Daily Market Comment by Rafi Boyajian. I'm Christina Marujos, and thanks for watching us at XM.com. Global stocks enjoyed a much-needed reprieve from the fierce selling pressure of the past 2 weeks on Friday, as the flurry of central bank and government interventions finally appeared to have some effect in relieving investor anxiety. All three major indices on Wall Street closed higher on Thursday, with the NASDAQ Composite being the main winner. Sentiment started to turn around yesterday as more central banks announced emergency policy measures to help their economies cope under the strain of national lockdowns and business paralysis. In Asia, South Korea's Kospi 200 index surged by more than 7%, and Europe was also in a buoyant mood. However, with the virus outbreak yet to have reached a peak in Europe and the United States, the flow of negative headlines is far from over, and it's doubtful there won't be more panic to come. For now, though, the latest wave of central bank action seems to have been successful in bringing some order into the markets, so the frenzy for liquidity has likely paused, and this is dragging the US dollar lower. The greenback slid against all its major peers on Friday, with its index pulling back from a 3-year peak touched earlier today. Against the yen, the dollar fell to 109.90. Unusually, gold rallied despite the calmer market tone and was last up 2.7% at $1,509 an ounce. The British pound managed to halt its dramatic slide, jumping back above the $1.17 level. While the weaker dollar is the main reason for the pound's recovery, a fresh dose of stimulus by the Bank of England has further resuscitated the battered currency. The Bank of England yesterday slashed interest rates to a new all-time low of 0.10%, the second emergency cut in a week, and relaunched its quantitative easing program. In Australia, the RBA's foray into quantitative easing put a lid on Australian government bond yields, but the Australian dollar still managed to bounce higher by 3%. The Canadian dollar also made up for lost ground, with the dollar loonie skidding to around 1.42 as oil prices attempt to rebound from this week's 18-year lows. This was today's Daily Market Comment here at XM.com. Have a good weekend.